Hey everyone, happy first Tuesday of October and welcome back for another Tax Talk Tuesday. For this week's tax topic, we're going to take a break from our discussion of estate and gift taxes. Don't worry, they're going to come back. And instead, I wanted to highlight four tax breaks that, unless Congress acts, are not going to be available after this year. So, in other words, if you qualify for the four tax breaks I'm about to mention, make sure you're using them because you might not get a chance to later. The first one I wanted to touch on is the current deduction for unreimbursed medical and dental expenses. So, under current law, taxpayers who itemize their deductions can deduct unreimbursed medical and dental expenses once they reach a floor of 7.5% of their adjusted gross income. So, what that means is whatever your adjusted gross income is, if your medical and dental expenses, your unreimbursed expenses, exceeds 7.5% of that number, you can deduct those amounts when it comes time to file your taxes. That floor of 7.5%, though, is set to go back to its previous rate of 10% on January 1st of 2021. So this is necessarily going to prevent some taxpayers from utilizing this deduction. So really, what can you do? You can, if you regularly count on this deduction or think you might qualify for it this year, you might want to schedule a physical or a dental appointment before the end of the year to maximize the deduction for this year because it might not be there for you next year. The next tax break to be aware of that is currently set to expire is what's called the non-business energy property credit. So again, under current law, homeowners can receive a one-time $500 credit for certain energy efficient home improvements. There's a list of what the IRS considers to qualify for this. But this one-time credit is also slated to expire at the end of the year. So if you've been thinking about making an energy efficient upgrade to your home and you have not used this one-time $500 credit, you might want to consider taking it or making that upgrade this year while this tax credit is still available. Of course, I'm one who typically likes to say, let's not let the tax tail wag the dog. So let's not, if you're not in a position to make an upgrade or something like that, don't do it just because you're going to get $500 worth of a credit on your tax return. Currently, the non-business energy property credit is slated to go away after December 31st of 2020. The third tax break that is going away or potentially going away is the mortgage insurance premium deduction. So if you pay mortgage insurance as a part of your loan on your primary residence, right now you may be deducting those premiums, especially or if your taxable income is below a certain threshold. Like these other tax breaks, right now that deduction for those premiums is going away on December 31st. So for PMI, mortgage insurance that you pay in 2021 going forward, you may not get to deduct those amounts unless Congress changes their mind. And lastly, for this video, the tuition and fees deduction, and this is probably the biggest one that's on this list. Currently, so taxpayers, if you have higher education expenses, taxpayers who do not claim the American Opportunity Tax Credit or the Lifetime Learning Credit, that is not what I'm talking about here. So if you do not take the American Opportunity Tax Credit or the Lifetime Learning Credit, taxpayers currently can elect to take what's called an above-the-line deduction for tuition and fees. Right now, this is a maximum deduction of $4,000, and it's subject to a phase-out like so many of these other credits, depending on your filing status. So whether you're single or married filing jointly. But basically, if Congress does not elect to extend this deduction, any tuition and fees, higher education costs that are paid in January of 2021 and after are not going to be deductible under this general tuition and fees deduction. This is not the same thing as the American Opportunity Tax Credit, the Lifetime Learning Credit, or whatever other credits might be out there on a state tax level. But if you don't qualify for some of those, you're also not going to be able to take this general deduction beginning in 2021 unless, again, Congress decides to keep it in place. So this list is not really meant to be exhaustive, but it is trying to highlight a few of these tax breaks that are going away, or that are going away. There's a few more I've seen online already. These are some of the bigger ones, but as you are engaging in some year-end tax planning, really, it's a good idea to take a second look or ask your accountant, if you work with one, about some of these expiring credits or some of the other ones that are out there. But also important to note that Congress could elect to extend all of these. They could even do this retroactively in 2021, so sometime before 2021 tax filings are due. So this isn't saying that you have to do these things or that these tax breaks are going away. But with all the uncertainty that's been happening lately, it's always a good plan to take what you can get when you know you can get it. So if you have questions about these expiring tax incentives, or you want to connect with someone who can take a second look at your returns, let us know. We don't do tax returns, but we know plenty of people who do, and we're happy to put you in good hands there. So as always, thank you guys for watching. Look forward to seeing you next week. And until then, I hope you have a great rest of your week. Thanks.